Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the Chicago office with brand spanking new equipment, courtesy of our production wizard, Paige Driscoll, who I had the absolute pleasure of seeing yesterday in the office. Always a treat to see the magician in person, always working behind the scenes on the show. Speaking of making a scene, joining me today, as always, from Texas, Director of Feed Procurement, Mr. Jake Kingsley, and returning to the Grain Feed from way down in Atlanta, Illinois, Director of Buyer Relations, Verl, no doubt Prather. Team, how are we today?
Doing just fine this morning, Jim. For the record, I am not the diva on this show.
You are a diva, not the diva.
I will take
No
that.
doubt.
Yeah, no doubt is right. Verl, always a huge hit in the Matthews family to have our favorite good old boy from Illinois on the show. How are things in Logan County this morning?
You know, we're doing great, Jim. Hoodies are getting pulled out of closets and harvest is underway here in the Midwest. It's an exciting time of the year.
It is a good time, man. I love the smell in the air. Everything is feeling crisp. It's still pretty warm though, right? I mean, we're waking up in, around 50, but we're eking our way into the 60s slightly during the day. I mean, that's the sweet spot.
You're right about that.
That feels good. I don't know what's going on down in Texas.
It is like 80 degrees and raining here this morning. I had a hoodie out too.
80?
Oh,
You got a
yeah.
hoodie?
Oh, yeah.
Oh,
That's
man.
30 degrees off of last week.
Dude, Verl and I are walking outside in 50 with just these EverAg polos on, buddy. We got nothing else.
Mm-hmm.
Pants. Right? I'm assumed. I can't speak for Verl. I'm actually not sure. But let's run through the show here. We've got a lot going on today in these markets. A bunch to run through. It's been a big week. We had the WASDE report on Tuesday. So the government releases that monthly supply and demand report. The big focus, of course, being on the U.S. balance sheet and what the government thinks about the yield numbers at this stage. And we'll get to that in a second with Verl. But Paige, if you would kindly timestamp the broadcast, it is Thursday morning, a little after 10 o'clock Chicago time. And markets are starting to turn green here again in Chicago. We've got the corn market, which was sagging a bit, is now back up above 480 for December futures. We've got Nove beans trying to squeak their way back higher. They are above 1350 once again this morning. Dees meal, that stubborn little byproduct. We got 2 days of liquidation after that USDA report. It is back above $400 per ton as we record. So maintaining that stubborn support from that stubborn little byproduct. A couple other markets, we've got wheat down slightly. December wheat still struggling to hold that $6 per bushel mark. And bean oil is back down a little bit this morning. So keeping an eye on all of the Chicago markets this morning. But let's now go back to that WASDE report. So Verl, that was Tuesday. We're recording this on Thursday. We've had about 48 hours for the market to digest this thing. We had, let's say, 2 days so far up until this morning, 2 days of somewhat of a sell-off across the exchange. Again, we're trying to find a little bit of support this morning. So what was your take on that report Tuesday morning? What's your thoughts?
Yeah, so first of all, it kind of feels like we put the WASDE behind us to a degree, and we're going to start looking towards quarterly stocks at the end of the month. So we're always looking at the next report and the next data coming down the pipeline. But nonetheless, on Tuesday, USDA released an outright bearish report on corn and certainly tamed the bullishness of soybeans by adjusting the demand side of the balance sheet. And corn production was adjusted higher, actually, due to increased acreage, even as yield expectations were walked back a bit. I wouldn't be surprised to see a larger gap between planted and harvested acres as we get closer to January due to increased silage. But the balance sheet certainly has plenty of forgiveness built in currently to lower production without adjusting the downward tone of the market. Interestingly enough, the USDA refrained from making changes to the demand side of the corn balance sheet and instead felt inclined to adjust soybean demand lower in both exports and crush. Although I expected that a cut to yield on soybeans would lead to an adjustment lower in demand, when comparing the demand prospects of soybeans versus corn, soybeans certainly have the better storyline currently. And therefore, the corn demand estimates remain well overstated. And at some point, USDA will be forced to start lowering export expectations. There certainly is an argument to be made that USDA is well aware of the current issues along the Mississippi River. And being as though the U.S. peak shipping window is coming quickly, there will be potentially less time to recover from a sales pace that has been slightly below of the pace needed to reach the current expectations. Although, it still felt as though corn demand was more deserving of a reduction than soybeans. And certainly it feels like now, right, the soybean market has been under pressure because it wasn't quite as bullish of a report as some had hoped it to be, it seemed like. But I think the reality is setting in a little bit that this soybean balance sheet still could get tighter yet. We're already in a tight situation and it's only September. So if yields continue to knock a little bit lower on soybeans, we're going to be in a position where we really need to see some demand rationing. And what helps ration demand? Higher prices.
That's exactly right. Yeah, that's exactly right. What's the saying, Verl? The cure for high prices is high prices.
That is correct.
Right. I mean, if we start to see beans make their way up enough, yeah, we will have to see demand rationing at some point. You made some awesome points there, Verl. So you started off with one. We do have the SEP quarterly stocks report that'll be released at the end of this month, and that's reflective of September 1st. What stocks on and off farm will be here in the U.S. as of SEP 1. And to reflect your storyline, that report's going to be really interesting because how tight will the bean balance sheet ultimately be? That report's going to help give us some insight as to what is still available here in the U.S. as of September 1st. Verl, we were talking about this yesterday. You put those two balance sheets, corn versus beans, against each other, and it kind of makes us wonder. The USDA lowered yield a bit more than we anticipated on beans, which I think we agree is concerning. And yet with some demand maneuvering, if you will, some demand adjusting, they ended up lowering exports a little bit. They lowered crush a little bit. So the balance sheet is still tight, maybe not as tight as that yield reduction would have provided. And so as a result, we did see 2 days of somewhat of a sell-off here at the board because those numbers maybe weren't as scary. But now, like you said, Verl, maybe the report's now a little behind us. We're looking forward. And as we record on Thursday, beans are trying to now squeak their way up to 1360. So that was after being near 1330 Tuesday afternoon. So quite a move here just over the past couple of days. Then you would put it up against the corn balance sheet. That's looking very loose. They did not lower yields as much as we thought. They did not touch demand, as you noted, which we think is very interesting. So at some point here, you'd have to think they ultimately start cutting back on some of those demand figures because we're just not seeing it from a flash sales standpoint or export sales standpoint. And yet December corn, it's holding 480. It just won't budge. Verl, you sent me a note Tuesday after the report. Are we going to bounce or break from the contract low? And I said, we're going to break it. And we bounced right off of it. So don't listen to me. Speaking of don't listen to Jim, I think that's a good transition to Jake. So Jake, how did the USDA report on Tuesday and the futures move since then potentially impact the physical feed markets?
I think Verl hit on a lot of very good points there, and there's a couple of very interesting changes that should play into the feed market here. I think first, it was surprising to see the corn balance sheet grow again. You know about the dryness around the river and potential logistic issues that causes, plus the already very lackluster export program we've got working there. So we've been kind of very slowly easing into corn purchases, kind of taking advantage of some breaks in basis after the last couple of years. I don't know that that river situation backs up far enough into the country to affect a lot of feed buyers on a basis level. We saw a similar situation last year. You know, basis really breaks down right there in the immediate draw territory of the river. And then as soon as harvest kind of wraps up, you see it perk back up a little bit. Farmers are a little bit cash flush. And with this meltdown in futures, they're going to try to extract a little extra premium out of the market via basis, more than likely. So still a big fan of kind of stepping in and getting a little bit of the Ocnove East, or maybe some October through March started while cash prices are down where they are, and then maybe manage some more of the forward curve with an option strategy or something like that. Because like you said, we bounced right off of that contract low and we are hanging out at 480. Even as beans dipped down to that 1330 area, corn really didn't release a whole lot there. And I think the risk to the upside in corn probably comes from the strength in the soybean market here in the short term, right? Verl talked about how thin that ending stocks is and potential for further cuts there. We did see a cut to exports and a little cut to crush, which I think is interesting. Maybe not quite as beneficial to our feed buyers as we would like for it to be, because we're adding crush capacity and reducing expectations in crush, which I think just speaks to how thin the soybean ending stocks number could get. People are going to start fighting over beans a little bit there if that's the direction we're headed. And I think that becomes supportive of corn. I think the other thing we have to look at is we've got some pretty big numbers out there for the South American crop that'll start going into the ground here in the next, month or two. Now, those are just projections based on increased acres and a return to normal yields for those folks after especially Argentina's really struggled with drought the last couple of years. But an El Nino year tends to be better growing conditions for Argentina, which we will take, but it tends to put a little bit of a strain, maybe some warmer, drier weather on the northern growing regions of Brazil, which is going to be some prime bean growing country. And then there's Safrinha corn crop, that second corn crop, which is what they use primarily for their export program. So we'll start to really focus in on how that thing comes together. We're talking about poor exports on corn and potentially reducing exports on beans out of the U.S. But if South America starts to falter a little bit, we very well could see demand come back our direction, maybe a little bit out of season. So those are some things we're looking at. Again, I think great opportunities in the market here. Both corn and protein values have kind of dipped back towards the low end of some ranges. So we've been encouraging folks to take advantage of that in some form or another. But we are getting very close to harvest. So we will start to find out some hard numbers here pretty quick and be able to really get a plan for the back half of the feed year, probably in the next couple of weeks, I would think.
Yeah, I think it's going to be a very interesting time of year to circle back to the beginning, and Verl talking about how exciting this time period is for the Midwest. But it's exciting for the markets too. I mean, we're going to start seeing real numbers, not just guesses or anything based on current conditions or field surveys. I mean, we're going to start seeing actual combine numbers soon off the screens, and it's going to be exciting. Jake, to your point, the corn balance sheet grew again, bearish. And yet we have held that contract low. We continue to find support near 480 on December. And to your point, the strength in corn currently might just be coming from beans. And that's kind of a goofy thing to be saying, but I think in terms of looking at the bean to corn ratio and just the way that that ratio does not like to move towards or very far beyond 3-1, beans favoring corn, it's getting close, and it's been close a few times. And so maybe as beans continue to elevate, corn just has to naturally elevate with it to an extent, regardless of how bearish that balance sheet looks. There's also a couple other outside factors. I mean, again, wheat's trying to hold $6, not doing the best job. If that finds renewed strength, perhaps that helps. And then we've seen crude oil now hit $90 a barrel this morning. We've been eyeing that 90 number, really all week. We finally have achieved it. So as crude oil and energy prices, potentially start to elevate again, into the last quarter of this year, perhaps that also, from an ethanol and or blending perspective, naturally elevates the corn market too. So we don't have extreme anxiety, but we know there is upside risk. So to your point, Jake, from a corn buyer, one feeding corn, if you're open, you might look at 480 and say, might as well own something here, just in case this market starts to get a little bit out of whack with these other outside forces. And again, to look at the meal market, just cannot shake $400 a ton. So really got to keep an eye on that market. And Britt O'Connell, who hosts from the Furrow, made a great note the other day that if you look at spot meal pricing just over the last couple of years, that spot meal price does not like to waver too far below $400 a ton for too long, at least over the past couple of years. So something to keep an eye on as we try and achieve these seasonal harvest lows that we hope the market would ultimately achieve here at some point. Gentlemen, I think this is awesome insight. I do want to hit you with a couple bold predictions. So bold predictions. Shout out to Phil and Kathleen at the Dairy Download podcast. We had a couple last week. Cody, Jake, and myself tried to predict some WASDE report yields. That corn number came in at 173.8. I think we were all lower than that. I think everyone in the market was slightly lower than that, but we were closer to that 171.5, 172.5 range. Consensus was 173.5, so it came in 173.8. And again, that's when we tested those lows. We were closer, Jake, on the bean yield. I think you guessed 50 flat, and then Cody sided with you. We did bring yields down to 50.1, so we were close. I came in at 49.9. A couple of people thought I said 45.9. I swear that's not what I said, but it would have been a bold prediction, though. That would have been bold. Not that bold, though. I try to be, but not that bold. I still think, gents, that will potentially break that 50 threshold probably in the next couple reports, depending on what yields look like off the combines over the next 4 to 6 weeks. So let's now look forward for some bold predictions. We're currently trading D's corn, let's just say round number 480 this morning. The range has been very tight over the last several weeks. So I'm going to give you guys a tight range for this bold prediction. Verl, what do we trade first on December corn futures? $5 or $4.60? We're trading 480. What do we trade first? $5 or $4.60? Tight range.
I'm going with 460, Jim.
460. That bear in you just won't let go. Just won't let go. What about you, Jake? $5 or 460? What do we trade first on December corn
I think
futures?
we get to 5.
5 first.
I think beans are going to drag it there. I think that 50.1 was USDA's best attempt on the supply side to help that balance sheet out, and they're going to break that thing down as soon as harvest gets really rolling, and beans are going to drag us to $5 for a little while. Not forever, but just for a day or two.
Okay, gotcha. So you're a seller at $5.
I think so.
Okay, gotcha. Okay, so Verl, when we were talking the other day, we asked, are the lows in? I said we're going to break them. We ended up bouncing. You still think I could have a shot, though? We're going to break the contract lows, 473.5, I think, on D's. We're going to push it to 460. It's coming up here in the next week or two.
I agree. Jake, do you think sticking to the 3-to-1 corn and bean ratio that Jim had mentioned, are we going to $15 beans?
I think there's a chance.
Oh, prediction!
Not in the very near future, but as we get a little further into winter, we catch a hiccup or two out of South America, then yeah, I think it goes up there and tries.
We just heard a $15 bean number here, ladies and gentlemen. Is that on no futures or is that like Jan March?
You probably better put that against Jan March, because what do we got here?
Just trying to dig you out of this one if you need it. Give you a little lifeline here.
Great call. Appreciate it.
Doing what we can. Hey, guys, speaking of beans and calling out these wild, bold predictions, let's stick to the November contract. And I'm going to twist this range a bit. I gave you 20 cents each way on corn. I'm gonna mix this up a little bit on beans. We're trading 13.60. I'm going to alter this range a little bit. What do we trade first? We go back to 13.30. Found a lot of support there the past couple days. 13.30 or $14. What do we trade first? 13.30 or $14? 30 cents to the downside. We got 40 cents to the upside. November futures.
I think November will go back to 14 before I see 13.30 again.
Verl and Jake, 14?
I agree with you, Verl. I think the low is in on this bean contract, and we're probably not looking back from here at this point.
Lows are in. You've heard it here first, everyone. The lows for beans are in, and you might take that March contract at $15. Attaboy, Jake. Now we're getting bold. We had some bold predictions also regarding some football, and they were a little too bold, I think. I think Jake went pretty aggressive on how badly the Chiefs would beat the Lions, and Cody too, not just you, Jake. You guys had like 17 and 20-point victory margins there. Didn't pan out for the Bears either, though. I did have to send Cody a couple bucks. Did you end up having a bet with Cody as well, Jake, or anyone here at Everag?
No, I did not, thankfully.
Smart man. Well, might be betting the other way here this weekend. Let's just do a quick bold prediction while we have a quick minute here remaining. Jake, I think we're both going to Florida. Not you and I personally, but our teams. Chiefs are in Jacksonville. Bears are in Tampa. So Chiefs at Jags. Jake, bold prediction.
I think we're going to win it, but I think it's going to be a shootout again.
A shootout again?
Well, maybe not a shootout, but a close one.
Okay, gotcha. It's got to be a close one. Gotcha. All right, Verl, I'm going to hit you. Bears at Bucks. Bold prediction.
Bears at Bucks. You know, I've learned in my time living in Illinois that you shouldn't bet for the Bears.
It's a sad and harsh reality for generations of Bears fans across Illinois. Be cautious when betting on the Bears. I have to just on record for the viewers in the audience say Bears by a field goal. I have to just say that, and then we can talk offline what I actually think. Bears by a field goal. Great bold predictions, everyone. Awesome insights on your market data. Really appreciate what you guys had to say, especially with such a crucial week here with this WASDE report. And to Verl's points, always on to the next one. We're looking at that quarterly stocks report here at the end of the month. So stay tuned for further analysis on that report. Excellent work. And a big thanks to Verl for returning to the show. Great to have your insights here today. We'd also like to thank Corey and the Everag Insights crew for their support. Thank you to Paige for production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. See you next time on the Grain Feed.